Kuldeep, can you hear us? We're just waiting for a few more people to join. Yeah, won't be long. Perfect. We got about 25 people in there. Let's give a couple more minutes, guys. We'll start before 7:05. Let's just give a couple more minutes, people to jump in. How are we doing today? If you just if you can use the chat function and tell us where you're joining us from. You can hear us? Perfect. No, that's good. That's good, Harry. If you can hear us now, perfect. Very nice. Another one from Sydney. Nice. Adelaide. Thanks, Rohit. We are here in Melbourne, in Collingwood. Canberra. That's interesting. Sydney, Melbourne. Perfect. Yeah, yes, Harry, he's sorting. But very nice. Just give us a couple of minutes. Let me find out what's going on with Bhavesh.
Oh, perfect. Thank you. Thank you very much. Oh, perfect. Thank you. Thank you for your patience, everyone. Finally, technology has never been a great friend, but yeah, this time it is all good. Thanks for your waiting, and let's kickstart. We've got good 35, 40 people in here in the room. Let's kickstart, and we go from there. So, no, perfect. So, talking about what the reason of having this webinar is to talk about the new strategy after the new budget, which is more about new builds. And we have identified locations, a good deal, why the fundamentals are stacking up, and the most important part in the new build sector, which is having the right builder in your team. And we have our preferred partner builder, Nathan Taylor, who flew from Hobart to Melbourne, sitting in the next room, will be joining this webinar as well. And we'll have a live Q&A. You can ask any questions from the builder, from us, anything related to it. That's the agenda for the webinar. So, look, perfect, kickstart. So what happened after the 12th May is basically the budget of the incentive of having negative gearing is scrapped off. So it's no more for existing properties. It's only for new builds now. So that's where a lot of, like, their entire generation of investors who have made well through this strategy doesn't exist anymore. So that's why now having a new build, a strategy of new build is moreover good, and in terms of what we are trying to achieve. So to explain you, to walk you through what is the core difference having a numbers perspective in place, let me walk you through the same 750 $750,000 worth of purchase, and what's the difference between uh, a new build and an existing house based on what has changed after 12th May. So if you look at the screen now, what we're talking about here is in an established property and a new build now, same $750,000 purchase, same 505 per week rental, that is 26,260, and having a 3.5% yield. Now, the expenses of your interest payments, rate, notice, insurance, everything all together comes up to 55,000, like close to $56,000 here. And if you look at the new build side, that is close to 52,000. The only difference in outgoings is like close to 4,000, because in the new builds the insurance and repairs and maintenance is comparatively low. So that's the $4,000 difference here. But now this is something that I want your pure attention here. That the difference between the your incoming, that is your rental, and your outgoing, that is all the expenses we just talked about, in till now, whether it's an established property or new build, you used to get tax benefits, you used to get negative gearing benefits in place, but that's have been abolished for the established property. It's just for the brand new one. So now, we'll looked at your comment, Naveen, but we'll get to it now. The If you look at from a tax point of view, from someone who is in their high tax bracket, with the negative gearing on an established property, which is still here, you are basically your it's basically costing you close to $30,000 every year. And whereas talking about the new build now, it's only costing you $5,000. And we are here, we have just talked about the long term rental. We are just where the rental is limited. Now, just to hold, or it's a gamble, but it's a good gamble, because the ultimate bet is on the capital growth. The whole intention here is the seven, or from all the investors, that $750,000 worth of property will be close to 1.5 million in a 10 years time. That is a national average, looking at the 40 years of Australian real estate history. So as an investor, the bet is on the capital growth, but from a cash flow lens, with the same strategy, this established property is costing you basically close to 572 per week. That is your net 4% already. So with the new build, it's the negative gearing incentives are still there. So it's costing you significantly less, and just to hold on to that property. Now we've understood the basic understanding what has changed over after 12th May, and why their motivation and their mindset around new build is so much in from an investor lens. Now, why we are buying in Hobart? Why? What are the fundamentals behind identifying and buying new builds in Hobart? Is the same. What happened in Brisbane, Perth? Same vacancy rate, same rental yield, factors which associate and makes any suburb investor friendly. So vacancy rate being an all-time low 0.3%, rental yield close to 5%, which gives a good confidence to the investor to invest. There's a good $330 million airport upgrade. So With this one, we are having expecting direct international flight from next year from Hong Kong and Singapore. It's going to increase employment, increase demand, and talking about another factor, there's a $1.2 billion stadium coming up in Hobart. Net migration being positive, demand supply imbalance being all time high. So this is where this number, we are very bullish on Hobart from a capital growth lens. Now, we've just talked about why new builds, why Hobart, and we've also talking unless looked at your comment, David, in terms of the net income. This is where it gets interesting. That with long-term rental, the rental is fixed. There's no upside. But when you mix the same fundamental of having new builds in Hobart and you mix it with Airbnb, that's like cherry on the cake. That's like best of both the worlds. Talking about how effective Airbnb comes into picture with this strategy, I'll let Gary walk us through the numbers, walk us through the strategy. Mike to you, Gary.
Perfect. No, thank you, Bhavesh. Look, I'll highly recommend park your questions. I know there are a lot of burning questions, and we're gonna go through one by one. We've allocated about 30 minutes. We got a builder with us. I'm gonna answer a lot of questions. Bhavesh will. So let's go through the presentation quickly. Let's tell you what we want you to present, and then we'll take the questions. So thank you, Bhavesh. So today we are presenting new build. We have shortlisted a location in Hobart, and so we're presenting on that and why new builds, are the way to go, the way things are going right now. And then we're buying in Hobart. Why are we buying in Hobart? Which is, the low vacancy rate, demand versus supply imbalance, stocks moving really quickly. We've seen about 10% growth in last, 6 to 8 months. Now layering this with a strategy called short-term rental. So what we are doing is we buying an asset, or whether we building an asset in a location where we can stack up our Airbnb strategy. So, just to give you a quick background, and I've done it before, I've been very out and loud on social media as well, that I have my own three properties in my portfolio on Airbnb, and I generate about $240,000 in revenue from Airbnb. And that's how I started this business of a buyer's agency. Now, what we do is compared to short term versus long term, the returns are 2 to 3x more than the long term rental. So the worst case scenario in Airbnb is still the best case scenario, better than the best case scenario of a long term rental. And the most important thing, the screen that you can see on your screen, I'm going to talk about is there is a big myth in the community that Airbnb is all about tourism, but 50% of the bookings which they come from the insurance clients. For example, if I have a water leak issue in my house, where I'm going to go and live if the house is not habitable for next 6 weeks, the insurance company going to place me in a nearby nearby house which is available in my suburb or the next suburb. So that's where one of the demand comes from. Um, and then corporate workers, locum doctors, construction people, which we are heavily betting on because there's a $1.2 billion stadium coming in. So they will need roughly 4,000 people working on that project for next 4 to 5 years. So which hopefully get completed by 2032, and it's already started. It's going to start in July. Um, so that's where the demand comes from, the 50% of it. And the 50% is about the tourism. Tasmania is an island. It's a beautiful place. I have lived there for 10 years. So we get a lot of tourists to visit the place, and it's still an underrated place. I personally believe there's still a lot to explore in terms of tourism, which government is doing a lot. So 11% of the economy is tied up to tourism part, and 1% out of 55 people works directly or indirectly in the tourism sector. So that's how strong the tourism sector is. So the 50% of the demand will come from the tourism side of things. Now, I'm just going to do a quick comparison just to showcase you the numbers on a 700,000 purchase. How whether it's a new purchase, whether it's a new build, whether it's existing house, I'm just going to show you how the number is going to look like. So let's say if you buy a property of $700,000, we put 10% deposit, 6.5% is the interest rate, 30 years loan term, council rates are $2,000, insurance, I'll say roughly $2,000. So on a short-term rental, the average daily rate is about what we charge is 320, and we base our numbers at a 70% occupancy. 10% I'm going to count for cleaning costs from an experience, and 18.7 is what the management company, anything between 15 to 25%, but this is what we charge, 18.7. Roughly $200 for the utilities, $150 a month for the maintenance. And on a long term, let's assume this same asset will make about $600 a week on a long term rental, 7.5% management fee, and 4% vacancy are factored in, and I've kept the maintenance pretty much same. So just these numbers are for exercise purpose. We can change and we can test the results. This is how it looks. So on a So on a long-term rental, we are negative. So we're negative about $20,000 a year, which is no longer a strategy with the tax changes recently after 12th May. Whereas in with the short-term rental strategy, the investors will make about $10,000 as positive gain after paying all the expenses, which is your water rates, your council rates, management fee, cleaning, your mortgage expenses at a 10%. Let's say if the LVR is about 90%. So that's how lucrative this is, and in last 12 months, we have bought about 45 properties, and most of them are running on short-term rental across Tasmania, in regional, in Hobart, in Launceston. We have bought everywhere where the numbers was stacking up at the time. So that's the difference between short-term rental and a long-term term rental in terms of the numbers. Now, what I'm going to do is I'm going to back to you, Bhavesh, if you want to take us further from there.
No, thanks. Thank you, Gary. Very well explained. Now, talking about, we just discussed about why new builds after the budget, why Hobart, and why Airbnb. But talking about the build part, it's all the strategy, but the most important part is the execution when it comes to the new builds. And having a right, trusted builder, credible builder is the most crucial part, making the strategy work. And we have we basically, just to give you a bit of a context, over the last, as Gary mentioned, over last 12 months we have purchased close to 45 properties. A lot of them have a development potential to add a granny flat, to add a second dwelling. And all of us, including us ourselves and our clients, we have invested in a brand new state where we have bought lots and we have invested our own money. So overall we are building 20 new homes this year. So to do that, we ran a tender among a couple of reputed builders, and out of which Nathan Taylor from Taylor and Beeson won it. We had a lot of back and forth discussion, negotiations, making sure we create a win-win situation for everyone. That is us as a business, clients, builder, everyone. So create an ecosystem in place, and that's where we were fortunate to partnership with Nathan Taylor from Taylor and Beeson. And he's been in the trade, builds 30 to 40 homes every year, been doing this for last 20 plus years. Very credible. And also an interesting fact, he has built one Hindu temple in Hobart and building another one next year. So very well respected in our community. And I can talk about him, but yeah, Mike, I'll take over to Nathan. He can just introduce and we can have the word from the legend himself. Mike, to you, Nathan.
Thanks, boys. It's certainly nice to be here, and very exciting times for new investment building in Tasmania. I've been a builder for 20 years. I've established Taylor and Beeson Building 15 years ago, and in that time, I've built 470, just over 470 new builds. Built a high regarded reputation amongst Southern Tasmania, particularly, and amongst the multicultural communities. As Bhavesh mentioned, we have built a Hindu temple 5 or 6 years ago, and we are in the design process for the new temple, and that is pretty exciting times for us. Over the years, I've found that a niche of building for investors, in particularly for local and interstate investors, where we can offer a turnkey product completely from start to finish, concentrating on the design work, making sure we're able to build it to a price point. So the investor, it still allows capital, positive capital at the end of the project. The investor is able to progress forward and, pardon me, the investor is able to progress forward, and it's a positive outcome for everyone. So in that turnkey, we've got all the civil works from the start to the finish, all your finishes and fixtures, which in each design process we present to you at the start of each build, all the way down to the small essentials like clotheslines, letterboxes, landscaping, all those items that you can just hand it straight over to either Airbnb management or a long-term rental management company. We do fixed price contracts, including all of these items I've just outlined. And there's probably going to be a lot of questions about this shortly, which I'm ready to answer. So I'll save a little bit of that for your questions. When we're doing the design, because we take care of the design, and this is really important for me as a builder to be able to make this a positive outcome for each investor. So we'll look at the investor's financial capacity to how, whether they're building their first investment or their second or third, or it's a multi-development even. So we'll get to know each and every investor, and we'll design around a budget that can allow them to, allow them to be able to construct their first investment or second and keep progressing forward after that. We're not putting all our eggs in one basket. We're not committing just to one investment. This is an ongoing focus for each client that we work with, and we work with many clients, both locally and interstate clients as well. So we'll take care of the design work, and we'll focus on cost-effective building. Particularly in Tasmania, we don't have a lot of flat land. It's a lot of hills, a lot of slopes, but we have lots of views, which can obviously return that works well with the value, and the cost of build can be higher when it's a little bit on a steeper site, but it works well because you're getting capital value with views and things. So we take everything into consideration, and all this is just custom for each block per investor, depending on where it is. So we like to get pretty heavily involved in that, because that is a very crucial element of investing. We also, after the design process, will take care of all the approvals, all the with the local councils that we all have a relationship with around Tasmania. They're all very different, but we all operate under the Tasmanian Interim Planning Scheme, which I have a team of people that understand, and our engineers and all our assessors, designers that we have on our team working within this interim planning scheme of Tasmania every day, so we can navigate approvals in a timely manner, because once again, holding costs for investors is crucial. Meeting Bhavesh and Gary at Jasper, I've decided to partner up with Jasper Advocacy, and we're really looking forward to the future. As you can see, that there's a lot of growth potential for Tasmania coming forward in the, starting from this month, and we're all really excited about it. And back to you, boys.
Perfect. No, thank you, Nathan. And a huge shout out to Nathan for, he flew up to Melbourne this afternoon, and he's staying the night with us. So thank you so much for coming up and doing this webinar with us, which is, I believe it's going to be really good value, and for all the people who are watching. So great. I'll quickly wrap it up. Now, what we have done is, so we have shortlisted a suburb called Port Hune, which is about 40 minutes south from the Hobart CBD. So we have 6 house and land packages available under $700,000. I won't go to the nitty gritty of it because we will touch base one on one after this session. We'll send you an email. But basically, the land size is anything between 500 to 600 square meter. The build's going to be about 140 to 150 square meter with a carport, 3-bed, 3-bath. Inclusions which will be included. So some of them, what we have done is we've done the planning part. Out of 6, we have couple which is ready to go, which we can start digging tomorrow once we have contract in place. Rest, what we can do is we have negotiated good terms with the developer. We can get a long settlement, delayed settlement, if you want to call it, about 3 months, 4 months. And if Taylor and Basin, if Nathan is involved in the project, he will take care of the design part, the concept, design, and then he'll take it to the council for the approvals. And once the build approval is in hand, is on our hand, we can settle the land, and the build process can take care of it. And once these turnkey investments are ready to go, the good part is that's where we come back in the picture again. So we have shortlisted this place. There is no rental. This is a little regional down south. So there is no rental available in Port Huon right now. So these new builds on a long term can get you about 550 to 600 rent per week. Second, you can claim negative gearing against it. Third, if you want to do Airbnb, so there's a lot of scope. And the Airbnb numbers will be a lot better than the long-term rental for sure. And we are operating in the area. We've done the due diligence on the numbers, and there is a strong demand for the same. So now, so that's pretty much it. What we're gonna do is before we go to the questions, you can scan this. This will be on your email. If you want to book a discovery call with us, we can talk to you one on one, and we can take care of all your questions individually. The last thing, what I'll highly recommend everyone is if you can scan your phone, if you want to join our WhatsApp community, because what we do is we post a lot of content on a daily basis. Our wins, our learnings, our client success, or any new information changes in this WhatsApp community. So if you want to scan and join, that'll be really valuable for your time moving forward. All right, enough of me speaking, and I'll shut up and we'll start taking questions. Yeah, I'll start with Komal. Komal is asking, do you do Perth Airbnb? What are the operational charges? We don't do Airbnbs in Perth. Yeah, I would suggest reach out to the local management companies. Anything between 15 to 25% is what I think are the charges. Vishwanath, if someone wants to demolish the old house and build 2 new investment properties, hope we still benefit the negative gearing and take benefit of capital gain tax. Not sure, Vishwanath. I'll park it for the accountant. Sorry, mate. Thank you, Harry. Same rent for new and existing property. Will existing property in established areas command more rental? Compare inputs on lot sizes and new versus old. Does that impact capital growth? Tassie is a little different in terms of new house and land packages. So, for example, like in Melbourne or Sydney, we develop new states. Let's take an example of North in Melbourne. We have Donnybrook, Craigieburn, and there is a lot of land. But Tassie, because it's an island, so there is a limitation. We cannot develop estates over over and over. Hence, so there is. I wouldn't say there's a lot difference between new versus old in terms of the capital growth, if that makes sense. And I'll get Nathan to later answer that as well. Nathan, do you want to touch on newer developments, like in terms of the capital growth?
Yeah, sure. So can you just ask that question again, Gary? New developments. I'm just reading through some of the questions here. I believe I'm just looking at the question about demolishing an old house and building 2 new investment properties. That can still benefit from the negative gearing, I believe. So that's been, yes, I believe that is correct. And Gary, sorry, you mentioned about new developments. Sorry.
No,
That's
it's Harry's question. So he's saying, what is the difference between new build and buying in an established area? Will there be a more capital growth compared to buying in a new subdivision?
Oh yeah, so by building a new property, the capital growth. So you're coming. Obviously, we focus on which area it is and the land purchase. So if we can, if you can get a group of investors to buy, that are obviously investing, so they're looking at Airbnbs or short, long-term rentals. Sorry, so if you can get a group of investors that can buy multiple lots in new subdivisions, and you can have, depending on each land developer, you can potentially have buying power, which can improve. But the aim of the game is to design and build something so that you have equity at day one. Times time in Tasmania is a little bit different to obviously the mainland, so we can work around that as in terms of design and approvals. It's just all about each lot itself, um, and the clever designs we can go around. So obviously, yeah, like my goal for the investor is for them to come out with equity in day one, of some sort, whether it's 10, 20, 30 grand. And obviously you've got a new home, so therefore it's got leaks. It's a new investment. We obviously also spec the builds up with um, uh, maintenance resistance like products. So like the type of flooring, in the wet area fixtures and finishes and all that sort of thing. So you're getting a life out of a new build, equity at day one. And to me, that seems very logical over buying existing properties. If you do think about buying existing properties, there's obviously lot sizes which, when the investors reach out to just get you boys at Jasper, you can guide them in correct lot sizing, and I can, I'm always open to, when properties are found in Tasmania, I can go out to site before their purchase and do an assessment and a report to make sure that an existing property can be developed further by means of building in the front or rear yard. They're good key investment properties that you want to look out for, and the boys at Bhavesh and Gary can certainly guide the investors in that direction.
Yeah, no, perfect. Perfect. Harry, back to you again. Yes, does existing properties get grandfather not impacted by removal of negative gearing, although the tax reform still needs to pass through the Senate? You're exactly right. So the answer is yes. Could the new build purchase be done through SMSF? Absolutely, it can be done, but it needs to be only single contract. Any flexibility to build a bigger house through new builds to accommodate larger groups and bigger bookings through new builds? Yes, it can be done, but again, the way we look at Airbnb, it's like an oxygen. So still, the bigger goal is capital growth. So for building a bigger house, we need to take care of, we need to factor in the build cost as well. But yes, to answer your question, yes, it can be done. For B2B bookings, are there any platform fees charged business to business? I believe you're talking about direct bookings. Yes, there is. No, thank you. All good, Harry. Good to answer questions. Vishwanath, please share the link for joining WhatsApp group. Gagan, if you can put a WhatsApp group, the chat function in this chat, that'll be good. Can you please show the slide that compared traditional investment property with new property? Yes, sure. I can do that. We'll send you an email after this. Yes, we can claim negative gearing if we demolish existing. Perfect, Suchita. You're a legend. Thank you. How much rent you can expect from Port Hune 700K investment if it does not go on Airbnb? And how long property will be ready at Port Hune? Very good question, Raman. Rent, we can get about 550 to 600. And how long will it be ready? 4 to 6 months for the council, for the red tape, and similar 6 months for the bill. So let's say 9 to 12 months. All good, Raman. Suchita, all good. Thank you. Could you please clarify why new builds are being proposed for Airbnb? Why not do Airbnb on an existing property? Absolutely. Look, David, we've been doing this for we've not even worried about this. We've been doing Airbnb on an existing properties. This new build, because a lot of people been asking for it, so that they can claim negative gearing, etc. Hence, we've come up with this strategy, and we are building lots of houses. What about the new Airbnb restriction being considered by Hobart City Council? Jacinta, really good question. I don't think it's going to get passed. Yes, there may be an extra cost on the council rates, etc. So a few months ago, there was a discussion, or it was actually chaired in the council meeting, that the council rate in Hobart City Council should be 4x or 5x to the normal rate, but that didn't pass through the council. And same, Anna Reynolds, who's the mayor right now, she's retiring in the next couple of months. But I'll be amazed if they actually ban, or if they don't pass the new Airbnbs in Hobart. But anyways, guys, I want to tell, there are so many councils in Hobart. So Hobart CBD is a Hobart City Council, which is like Lena Valley, Newtown, West, which is within the 5 to 10 kilometer radius. But where we have bought properties, we have bought in, Glenorchy City Council, Surreal Council, Clarence City Council. So yeah, to answer your question, what about negative gearing if property are bought in property investment trust? Again, it's an accountant question, Vishwanath. But yes, I don't think you can claim negative gearing in your trust or a company. You just pass. You just park your losses and then offset again when you sell your property. Very good, very good. Bhavesh, you have anything to add? Sorry, I've taken lots of questions. Do you want to add anything?
No, I mean, like, happy to answer any more questions. Like, good to see so much engagement in the chat. Any more questions from anyone? This land and build project. Good question, Nidhi. So what? So anyway, there has been, if you look at the national average or a track record, we, just to answer your question, we are expecting double-digit capital growth in this land and build. And based on where how the market is going, we are, if we can buy this around 700 mark, based on the recent comparable sales, we are looking at 30 grand upfront equity as well.
Are you
I,
suggesting?
PNB in Port, and that would not be a great option as tourists won't travel 15 minutes to reach there. Now, that's very good question, Vishal. I'm glad that you asked it. So the thing is, as Gary mentioned before, showing the calendar as well, like more than 50% of our bookings. Let's to put it this way, only 50% of our bookings are holiday makers or tourists who books for leisure, book maybe for a weekend or a couple of days for a weekend getaway. But majority for clients are corporates, insurance companies, like people traveling for work, families between homes, interstate travelers. So they end up booking their place for 30, 40, 60 days, because there is no, like, as in this particular area, there is zero rentals available. So talking about vacancy rate, it's 0% vacancy rate. So if there are like close to 600-700 houses out there, so families between homes, someone visiting there, they have got no alternative accommodation, or no alternative solution to stay. So that's where this Airbnb short-term rental accommodation comes in. We leverage platforms like Airbnb, Booking.com, VRBO, and everything. But yeah, it's not just tourists. I hope I answered your question. Thank you. Wonderful session. Thank you, Vishwanath. Sunda, are you operating in North Tasmania region? Yes, yes, Sunda, we are. We are operating, and we have got a good team out there. We are pretty much serving and managing properties on short-term rentals pretty much all across Tasmania.
So I just want to add one thing here for everyone. So we have two legs to it to our business. So we a buyer's agent. We buy investment properties for the investors, making sure their interests are kept on the top. And then as a side kick, we have a sister company which is called Tezito Metro, which manages the short term rental management. If you're putting it on a short term rental manage like on Airbnb, and now we have partnership with in a similar model with Nathan from Taylor and Beeson, where we will create economy of scale, which will value everyone in the food chain and will build new houses. Where we will generate equity for the investors on day one, and at the same time, builder is getting consistent work, so they don't have to do sales and marketing. And at the same time, we are also for the strategy for the project managers. We've been looked after as well. Great. Uh, I'll answer this one, Bhavesh. Rushub, can we buy old property in good suburbs near CBD, do some cosmetic renovations, and put it on Airbnb? 100%. Absolutely. We've done it so many. Check it out. Check out our social media or Bhavesh or Jasper Advocacy. We've got so many case studies. We've created an equity of returns of 2.5x minimum from the equity side of things, and those properties are flying on Airbnb. Population growth lowest in Tasmania compared to Australia per stat at the moment. Any worried about this? Not really, Monica. Reason I say this is the population of the state is about 550,000, right? So if you add another 10,000 or 15,000 people, the numbers in the percentage shifts very fast. 5%, 10%. And right now, the immigration is at the lowest point in Australia. So once the government changes the policy, there's going to be a lot of people pushing to regional to go and get their permanent residencies. So not concerned at all. It's still positive though. Like I think it's tracking at about 1%. Very nice questions. Some of them are existing clients, and I'm really happy. They are keeping they're asking us questions, keeping us on our toes. So great questions, Monica, Harry, um, Suchita. Happy to take more questions. Any questions for Nathan for the new build? He'll be happy to share his 2 cents, and we can always touch base offline, one to one as well. How much land size under 700K? It's about anything between 550 to 600 square meter blocks, which we are targeting, and putting a 3 bed, 2 bath. Hobart, like Tasmania as a whole, is doing really good in terms of the growth. Because of the demand versus supply factor, and like mainland Sydney or Melbourne or Brisbane, we cannot pump out houses like we can in on the mainland, because it's an island, and there are limited builders, there are limited civil construction companies, material issues. So that's always going to be the constraint. So if government comes in and say we're going to build 30,000 houses in next 5 years, that's a lie. They can't. um, would you agree, Nathan? Would you add anything to that?
Yeah, no, I absolutely agree. We do have restrictions around materials and labour in particularly. It's we nothing like the productivity of Melbourne and Sydney, but look, I'm finding the the demand for investments and rentals in particularly. So uh, building properties for long-term rental for towards the lower end of the rental market, is there seems to be a high demand, along with the Airbnbs, like particularly around Port Huon. You've got you look at what the infrastructure in those areas. So down at Port Huon, there's lots of businesses, lots of large scale businesses in the aquaculture industry, and there's two aquaculture industries down there. There's lots of large scale fabrication companies, farms, which all have backpackers for fruit picking and all that sort of thing. So they're all the types of Airbnb clients you're going to get down that way. If you look, probably Gary, you could provide historical reports on the movements down there as far as Airbnbs, but for those sort of companies. But yeah,
numbers are great for the Airbnb side of things. So that's the demand for the workers. But also, Nathan, like for tourism, like you've got Hastings Caves, you've got Tahuna Airwalk, you've got Huon Valley, Bruny Island. Like there is so much to explore down south. You live that way, don't you? So you know how much tourism we get towards Huon Valley, Margate, and all sort of areas.
Yeah, absolutely. And look, yeah, it's back on the capacity to build more homes. Look, we do certainly have capacity to build more homes going forward, and it's more like you were mentioning, Gary, about economy of scale. So it's just important that, like, while we're targeting either areas closer to the CBD or on the outskirts of the CBD, otherwise new subdivisions in the regional areas where we can go and build 3, 4, 5, 6, 7, 8 Airbnbs or rental properties, because we use those economy of scales to as which can in return benefit myself, the builder, and the investor as well.
Perfect. And no worries about if you're registered for this, you will get an email with the recording link so you can watch it. And we'll also be uploading it to YouTube as well. Great. Nathan, question for you. Can you do prefabricated home in these new lands as well?
Yes, we absolutely can. We're just in the process of designing 12 modular homes, so they can be, we can either transport them. The 12 designs that we currently have in progress are transportable homes.
Very nice.
And we can also build them modular on site as well. So yes, anything's possible.
Yeah. And what about, Nathan? Are they 2 bed, 1 bath, or what sort of how do they look like?
They vary. So you can, we have like a studio type style as the smallest, which are really, really cost effective and really attractive, particularly in, any block that's developable, that we can potentially put multi developments on, whether it's 2, 3, 4, 5 or more. In regional areas, that can be quite attractive as well. Like with like a more rural setting, we can build these off site at a cost effective price and deliver them to site. We do that as a studio type, so they're more focused on Airbnb short term stays. However, they do come up to 2 bedrooms. There is potential to do 3s and 4s if you join them together, but then it becomes a little bit more expensive, and you're more with the modular things. They are focused on an investment perspective as far as rentals and short-term stays go. So the overall value, if you are to build a bigger modular home and add them together, can be quite expensive, and probably just as they are just expensive or not more than a home built on site, on which there you'll be more benefit in building a home on site with those, say, 3 bedrooms or more.
That makes sense.
Yeah.
Great. Thanks, Nathan. David, do you provide a rental guarantee as well, as the whole business case relies on getting estimated revenue and 70% occupancy? David, I won't say there is a guarantee, but there are, the case studies which we can show you, the statements from the existing houses which we've been running successfully on Airbnb. Guarantee. I think it's. I don't think anyone can give guarantee. We will present a data-backed research. We look at a lot of tools to get that 70% occupancy mark, and we'll be happy to showcase our history statements for our investors. No, great. we got another 10 minutes, so we still got about 25 people in the room. So would love to answer any more questions that you have. And after this session, you will get an email link where you can watch and replay this session at your convenience. Share it with your friends, family, and connect with us. Definitely, connect with us on our WhatsApp community if you are on WhatsApp, and book a call with us if you are in the market for an investment. We are predominantly dominating Hobart Tasmanian market. Uh, we buying in that area, and for next 3 to 4 years, the proposition is looking really good, and there are a number of factors, which is demand versus supply, infrastructure investment. The vacancy rate is pretty much 0.3%. It's quite close to zero. Hence, there is a lot of shortage of houses, and the value of the house has been keep on growing up. And the more important, you can still buy a quality asset of 650, 700 with a land size of 600 to 700 square meter. So a lot of the houses in the 45 purchases we have made, out of those 45 purchases, like more, about 40%, we are building granny flat, second strata dwelling, which Nathan is working with us very closely on the designs and the concepts and the building side of things, and also a subdivision, which is really good for cash flow for later on, and the upside of the land. No worries, Nav. Appreciate it, and I hope this Q&A thing is good. I think I've done a lot of talking. Bhavesh, over to you if you want to wrap it up. If any question come, we can answer. Otherwise, we can close this webinar and give 8 minutes back to people.
Yeah, no, perfect. No, good. Thanks everyone for your time, and big shout out to Nathan again for flying from Hobart to here and doing this live webinar. I'm very confident it has been a great value for all the people who have spent their time here. And thank you everyone. Thank you very much for your time. And now, as Gary mentioned, if you are in the market to buy a next investment property, whether existing one or a brand new one, we can certainly add a significant value. And one thing I like to add here, because we're talking about Airbnb and everything. So, David, we have been doing this for last 4 years now. Like we are like Airbnb host first, then investor, then buyer's advocate. So we've been doing this like, and just like anything in life and business, once you keep on doing something, you build an insight around it. And backing our insight, we have got some filtration process, and we can walk you and all everyone out here. If you book a call in the market to buy your next investment property, we basically, how we run our meeting is showcase you what we have done, how exactly do we do it, and what is the fundamental and the filtration process behind it. Again, happy to jump on a call and see if we can add a value to your portfolio. All from my side, and thank you everyone. Thanks Nathan, thanks Gary, and thank you everyone for being a part of this. Thank you very much.
Perfect. Good night.
Thank you. Thank you,
Thank
everyone.
you.